I have the great pleasure of hosting an interview now, a bit of a fireside chat, with Dr. Neil Adshead. And Neil and I have known each other for a couple of years now, or a number of years now, and I'm excited to interview him here now because he's got a wealth of knowledge about the space, about exploration, about discovery investing in junior mining in particular. So I'm really looking forward to picking your brain, Neil. And thanks so much for coming out all the way from the US. And thanks so much for joining us here. I think you're the newest advisor over at the Commodity Discovery Fund.
Yeah.
And oh, there you go.
It's me and you.
Yeah, fantastic. Great photo to start off. And we got to see a Champions League game there. What was it now? It's almost 2 years ago now. I can't believe it.
Yeah.
But it's been a while. But maybe we start with a bit of an introduction, Neil. Like, who's Dr. Neil Adshead?
Yeah, okay. I grew up in the UK. In Manchester. I graduated with a geology degree from Birmingham University a long time ago. And then I worked on the North Sea oil rigs in the late 80s, early 90s for a brief period. Didn't really fancy spending the rest of my life offshore. Then got a scholarship, won a scholarship to study economic geology at James Cook University in North Queensland, which in the 1990s was quite a prestigious economic geology school in Australia. Plus, it was also on the Great Barrier Reef, so it was a very nice place to study geology. Then I joined a major Canadian mining company called Placer, working. This is some of these photographs from Papua New Guinea. I spent 6 years working on a gold-silver mine in Papua New Guinea. I had roles. The first 2 years was doing proper grassroots, bushwhacking type exploration in the jungles of Papua New Guinea. The second 2 years was working in the mine, in a production role, so I got to understand how an open pit gold-silver mine works. Then the final 2 years working in PNG was really as exploration manager for Placerdome's local subsidiary. Placer then closed the mine. The mine basically ran out of ore. They moved me over to Vancouver. I still live in Vancouver, been there almost 25 years now. Stayed with Placerdome in a technical role for 3.5 years. Like I was an analyst associate working with the manager for global exploration, and part of my remit was actually studying and looking for gold mines in Europe, actually, for Placer, which was quite nice. I left Placer in 2004, so 20 years ago now, and I basically worked on the buy side, so on the investing side, as a mining analyst and a portfolio manager for the last 20 years. One was with the first 7 years was with a hedge fund out of San Francisco, and we caught the bull market, all driven by the growth of China, and that was very successful. I left them and then joined Sprott, primarily working directly with Rick Rule for over 5 years as basically Rick Rule's analyst. Had a little break from Sprott, and then they invited me back in at the end of 2018, and I went back to Sprott, created a $50 million junior mining company fund. Managed that for 3.5 years. Obviously through COVID, it was up and down, it was all over the place. And I exited that fund at the end of March 2023 and then joined the Commodity Discovery Fund as a consultant analyst probably 3 to 4 months later. And I'm happy to be working with the group. Yeah, it's a great group of people.
No, phenomenal. Appreciate the introduction there to yourself, Neil, of course.
Long,
setting the scene a little bit and why you're working with the Commodity Discovery Fund. We've got to work maybe through your profile as an investor a little bit as well. I'm trying to understand, like, what's your focus when you invest? You ran a small junior mining fund, $50 million. What did you pay attention to? What was your focus?
I mean, my background's geology. When I first started being an analyst, you kind of focused maybe a little bit too much on the geology. Obviously, the geology is important, but ultimately, you're not investing in the project, you're investing in the business. And the business is run by people. So, a key thing is getting to know who's who in the zoo. So, living in Vancouver for 25 years, it still is a junior mining hub. The stock exchange there closed in 1999, I think it was, but there's still several hundred junior mining companies there. So it's a great place to be based. I must have had 10,000 meetings, 10,000 pitches from everybody in the city. And when I was young, I thought, people are so important. I actually started to keep a record. I have V cards, flat V card files on my iPhone, and I looked at it this morning. There's 8,412 V cards. So I have a V card on lots of people in this business, and I get a lot of calls. People say, "What do you know about this person?" And I can say, "Oh, I met him on the 12th of September, 2012. Gave me this pitch talking about that, and then I wrote what I thought about him, my emotional reaction to meeting that individual." So it's kind of crucial. And my first port of call, so to speak, on a pitch, I don't look at the geology or the commodity, I look at the people. And if there's some bad actors on that list, I just will hit the delete button and move on. I won't even look at it.
That's a very good first filter. Very easy to do. Just go on the website and look at board and management, of course. But sweet spot on investing, like exploration, development, what type of, whereabouts in the cycle? We all know the Lassonde curve, I'm pretty sure, where you have the discovery cycle, and then, of course, the development cycle, and then the production cycle.
Sure.
Where do you focus on, and where do you get interested?
Well, my fund, so when I went back to Sprott, they gave me a white sheet of paper, and they basically said, create the fund that you want to create. So I created what I called, I gave it a name, I called it the Drill-Driven Alpha Fund. So I was really looking for stories whereby alpha in the market, so outperformance in the market, was going to be driven by drill results. So it's quite very similar to what Willem does, actually. Willem's he's not looking to really invest pre-drill discovery, he's looking to invest after it. And that was really what I was doing. So I'd wait, I'd see myself as a little bit of a fisherman. You got your bait, you got the bait on the hook, you're sitting there on your boat, you're just tapping away, just waiting. You've just got to be patient. Instead of rushing to invest your money, I prefer to wait, sitting there with a pile of money, waiting for the investment to go past the boat, and then I just pull it in. So that's really what I was doing. So yeah, jumping on a drill discovery, understanding that drill hole as soon as possible, understanding the context of it, and then having the conviction and the confidence to push all your chips in. There's no point making a great call and then investing $10,000 in it. You've got to be brave enough to say, I'm going to put $2 million in this. You've got to be brave, because you're competing with everybody else. And you see that the really good discoveries, they come along and they go like this really quick. You've got to get in it. You've got to be brave and jump in as fast as possible.
Are those companies often on your radar screen beforehand, or do you sometimes get surprised as like, oh, I never heard of that one, but that drill intersection looks fantastic?
No, I think a big part of my role was to basically know almost every junior out there. And I'm not saying I know it enough to make a call immediately, but if somebody says, what's Prismo Metals doing? We were talking about it before. I'd kind of know. I'd know they're in Arizona, early stage. I'd just know enough to. It's pretty rare that a good headline comes out of left field and it's like, who are they? That's my job is to, I spend hours a day reading mining media. There's so much information on the internet, and that's the great thing about the internet and the iPhone today. You've got endless information.
Discovery is a big buzzword. I think we need to define that a little bit. What does that really mean? What is a discovery? Because if you look at press releases, even people taking rock chip samples call it discovery sometimes.
Sure.
Like, what makes a discovery a discovery?
Well, I suppose it is a discovery, technically. But in my context with the fund I was running and the fund that Willem and Terence and the team are running, you really want to see a drill hole discovery. That really, because basically you've proven it then in the third dimension. It's all well and good. You can walk along the surface of the land and chip a few rocks and you've got a bit of gold in it. You think, well, made a discovery. But it's really that third dimension. You've got to stick a hole in it, and you've got to find that there's a potential volume of rock there which could become a mine. So those drill holes are crucial. But it's also a massive step for a junior to take rock chips. It's quite cheap. Send geos out with a hammer and a bag and take some samples. That's cheap, but getting a rig out there and drilling a hole is going to cost you hundreds of thousands and sometimes even, $1 million a hole. It can be, depending on where you are. So yeah, drilling's the step. And I always saw my role as a geologist and an investor, or a geological investor, to be able to put that drill interval into context. That's the crucial step. Because a lot of people can look at a headline and go, oh, that's high grade. But if it's high grade, but it's 1,000 meters down and they've drilled the hole, from 5,000 meters high in the Venezuelan jungle or, outback Russia, it's not going to mean anything.
I was going to say, like, when is it worth chasing a stock? Like you mentioned, of course, upon discovery, people pile into it. Like, when is it worth chasing it? Like, when do you make that decision, and what makes the decision?
I'd say experience makes that decision. Yeah. An example I go back to when I was managing the fund at Sprott. There's a company called Rupert Resources that made a very good gold discovery in Finland. And they put a nice headline. It's one of the problems living in Vancouver is the market opens at 6:30. So we're generally up at 4 o'clock looking at the news. We've got to be up really early every morning. Rupert put a drill result out, maybe it was 90 minutes to the open. So I'm like, wow, that's a nice hit, And I know the guys, so personal, didn't even need to look at the people, like, yeah, tick already, what is this? And often with gold, you'll drill a high-grade interval and they'll smear it. They'll mathematically smear it. So it looks really good, but it's really just one little skinny vein that they've smeared mathematically. But the Rupert drill interval is just spectacular. It was like 8 grams, 6 grams, 4 grams, 5 grams, 6 grams. It was continuity. It was beautiful. So at 6:31, I was pressing the buy button. So I only saw it 90 minutes before. So somebody drove the stock price up 50% in the morning because I thought, this is spectacular. But they come along, I don't know, once or twice a year, really. They don't come along very often.
A lot of false starts.
But when you see one, you push all your chips on. You don't go, I'm going to put 10 grand in and feel really good about myself. It's like, no, you've got to be brave when you see something you really like.
You've really chased the stock up there.
Yeah,
that's worth it.
Your Ex-Sprotts and your Pierre Lasson's and those guys didn't get super wealthy by, making €100 bet or anything. You got to have conviction.
Yeah.
And conviction, I suppose, comes from confidence and experience, and
Yeah, we haven't seen a lot of discoveries this year. You mentioned once or twice a year that big deal comes around, of course, but we've seen smaller discoveries. Not all of them can be tier 1 assets, like the Rupert project up in Finland there. But what do you make of tier 2 discoveries? Like, how do you put them into categories? Like, they're still a nice hit.
Yeah, sure.
Do you see some share price appreciation? Because they can't all be, the 10 baggers, but 5 baggers are nice.
I mean, something I had to learn as an analyst is ultimately it's all about the stock. It sounds a little bit cynical, but sometimes you can make money on mediocre projects. It's just that it's a warm market for the commodity. Maybe it's uranium right now or something else. Somebody drills a hole that you go, yeah, that's nice, but it's not amazing. But all of a sudden, the stars align, the share structure's tight. Maybe they've got 1 or 2 big shareholders who are going to jump in and push it up. So sometimes you just ride the wave as well. That's a bit more of a trading mentality. But at the end of the day, I was paid to make money out of share prices going up. So even though I'm a geologist, and I will say, when I go through passport control, it says, what's your career? I do say geologist, I don't say investor. But I've learned after 20 years on the buy side of having so many losses and a few winners, that at the end of the day, you've got to stay focused on making money out of the shares. So sometimes you can make money on a fairly mediocre discovery. It's just, you have to analyze that.
Maybe to summarize the last few points that you've mentioned, but like, if you analyze your portfolio and the winners in your portfolio, what were the common denominators? Good capital management by the insiders helps. Yeah. Sometimes you just don't plow on relentlessly, issuing millions and millions of shares at bad times and doing programs that nobody cares about. Sometimes I have a meeting and actually I like the people, quite like the project, but then they say to me, we're raising $20 million and we're going to do this. And I'm like, I don't really think that's a good use of money. So what I want to see is, for every dollar they're spending, okay, let's say for every $1 million they're spending, show me how you're going to add $5 million of market cap. Show me how you're going to make. I always want to see value per share. Has to be value per share. Because I've seen some stories where the value of the company's gone from 10 million to 100 million over 5 years. It's gone up, say 10 million to 50 million, it's gone up 5x. But over that time, they've issued 20x number of shares. So the share price goes down. So ultimately it's about making money, value per share. Hopefully that answered the question. Yeah, no, absolutely. And one thing to follow up on is value creation versus dilution. Like, where do you draw the line when it comes to financings of companies, smaller companies? Let's assume it's a 10 million market cap company that needs to raise $5 to $10 million. Like, would you accept that? And
it's very difficult running a junior mining company. I've never done it. I will never do it, and that's because I've seen so many people have a hard time doing it. It's very difficult. You kind of got to balance that. You're trying to raise enough money to push the company forward, to add value every single time with that money you've raised, while not diluting the equity too much. And it's the problem with the industry sometimes, well, most of the time, it's so cyclical. You have times when it's flying, and then you have times when it's, you're down in the toilet, and it's terrible. So what I say to every junior when the market's flying, it's like, fill your boots. If people are out there and they're shoveling, throwing money at you, and you need 5 million for your project, go and take 20 million. Go and take 30 million. The juniors are nearly always undercapitalized. They don't have enough money for what they propose to do. And that's actually a due diligence point I learned, is that juniors come to me and they've got like a big project. They're in a remote location. They've got a big target. It's 500 meters down, and they've got a $5 million market cap. I just say, it's going to fail. You're not going to do it. It's too big. BHP should be doing this, not you. And they just won't be able to do it because they won't be able to raise enough money to drill the 24 holes they need to drill into it because it's too expensive. So there's quite often a mismatch between capitalization and business plan. So that's another due diligence thing that I look at. But yeah, if we ever come into a true bull market again, it doesn't feel like we've had one for a long time. I'm hoping all the good companies I know out there just raise as much money as they can. Just scoop it in your balance sheet and don't worry about it. Yeah.
Funding is an interesting topic because we've actually raised $4.7 billion amongst the juniors last year, just in Canada alone, not counting Australia. It doesn't seem like we have a funding problem, but a finding problem. And I'm stealing that quote from Joanna Punica, who was a guest speaker here last year, and a really good quote. Why aren't we seeing more discoveries in that regard? Like 1 to 2 a year doesn't sound like great success in our sector.
No, I'm referring to 1 or 2 a year whereby I would be pressing the button at 6.31 to buy a stock. Yeah, that's what I mean. No, there are discoveries being made. It is slower today. I'd say a discovery costs you more money. It's just the cost of inflation. It's harder doing work. It's harder getting permits right now from governments and local communities to actually do any work. So I think there are discoveries being made, and sometimes a discovery it's like it's on a burner. You drill a few holes, it can take 4 or 5 years. The project still looks good, but then they've not drilled that doozy hole right in the right place, and all of a sudden the whole thing it's like dominoes. All of a sudden it's there. You found it. So doesn't often turn just on one drill hole. Sometimes a discovery can take years to. So there is a lot of money going into the ground. Maybe I'm a bit more optimistic than some people, but I mean the world hasn't run out of commodities. We talk about commodity shortages coming. We see the graphs of copper and everything else. It's like we always find a way to fill that gap. There hasn't been a metal that's been short in the world for 50 years. The mining industry is really good at providing raw materials for society. We're probably getting to the point, though, with permitting, especially permitting. And I agree, maybe there's a little bit, it's hard for guys to raise money to build a mine because we've seen the capex explosion. So a lot of projects are just sitting there in this sort of queue. They're waiting and the capital's not there, the permits are not there, investors get bored and go and do something else. So you can still make a lot of money out of discoveries, though, because the good thing with the discovery investing is you're buying it on the back of that drill hole. The ultimate mine in 5 or 10 years' time, it's not really relevant to your decision that you're making when you're buying that drill hole discovery. So the ultimate mine, the ultimate outcome of that discovery is kind of irrelevant in a way. Yeah, if that makes sense. You very rarely hold a junior mining stock for 10 years. You can, sometimes works, but you're generally trying to get in on that lift, that initial lift, and then ideally you're jumping out 1, 2, 3 years later when you've realised how big it is, and then ideally put all that money back in the next one.
Well, that's the typical Lassonde curve.
Yeah.
You exit up at the top of the discovery and you come back down during the development phase.
Yeah.
Right? Very typical. Let's talk about a couple positive examples. Like big comes to mind, meaning Hercules Silver. Run us a bit through that scenario. And I know Commodity Discovery Fund in Willem is invested in that stock as well, because that's something the market, what's the nice saying there? The euphemism is like pigs to shit. Is the saying, right? Yeah. But the market just gobbled that one up and loved it. What was so significant about it, and what triggered that rally in share price? I think
it was driven by Barrick, really. Don't know if you know the full story there, but
sure.
Hercules was drilling they're called Hercules Silver. So they're drilling this silver play in Idaho, drill the hole through the rocks, but then there was a big geophysical anomaly lower down. So they thought, we'll drill one hole and keep going. So they kept going, and they went through this unit, and it was completely different. The geology below was completely different. It's like some very big geological contact was there. And then the rocks below, there was high-grade copper in it. It starts about 200 meters down. So obviously, the discovery investing community jumped on it. But then out of left field came Barrick, which is one of the biggest gold miners in the world, who wants to grow. The CEO of Barrick is pushing his geologists to own more copper. And they've struggled and they've missed various deals. So it's like the boss got on the phone and said, we need to own this. So they tried to do a deal with the CEO. And the CEO talked to him a little bit, but then Barrick went in the market and it very aggressively pushed the share price like this. Just went through the roof. Went from maybe 20 cents to 80 cents. And then over the weekend, I talked to the boss in Palm Springs last week at a conference. He told me the full story. He said, over the weekend, Barrick said, we want to own 9.9% of this company you name the price. It's like junior's dream. So they basically just gave him a blank check and said, fill in the number. And he said, okay, $1.10. He went, okay, done. So he gave him $20-odd million at $1.10 after the stock was 20 cents, 1 or 2 weeks before. He's now got $25 million. The rig started turning last week, and I'm going to Idaho. I'll be in Idaho in 2 weeks to go and have a look at the new drill core coming out of the ground. So it'll be fascinating to go see it. Yeah. So that's why that stock had an absolutely bonkers run. Yeah. It was driven by a sloppy, aggressive major mining company, which hopefully we see more of that, because you actually want that explosive lift, because you can make millions of dollars in a day, just on your stock, having that crazy lift.
Has Hercules Silver been able to follow up on that initial hole?
They've drilled, from memory, they've drilled maybe a dozen or so holes in various places around it. Those holes were kind of prospecting. Now they've got a dozen holes in the third dimension. They've allowed them to put together a little bit of a better geological picture, but they've done some very fancy geophysics to identify other hotspots down at depth. They've now started a quite aggressive 20,000 meter drill program. Somewhat step out, somewhat wildcat. So that's going to be fantastic to see what that turns out. So that part of Idaho doesn't really have a history of porphyry deposits. But given this strange geological feature of almost having 200 meters of a very different rock unit on top and then well-mineralized stuff below it, nobody knows how big that is. Who knows how big that is? Could be enormous, could just be a small pocket, but, cross your fingers it's enormous, because then Hercules could go to the moon.
It's like on the Lassonde curve, where would you say we are right now with that story?
It's a funny one. The Lassonde curve, there's no scale on it from a time point of view. So they've made the discovery. It's had a huge run. But I'll never forget, there was a junior called Aurelian in Ecuador. They made a discovery, and the stock went from 50 cents to $3. And I'm like, I've missed it. And then they did a massive financing at 275, and there's like, broker calls me up, do you want to do some of this? I'm like, I've missed it. It's gone up 5x, I missed it. And then went to $40. So it can go like this, you just don't know. You don't know. Ideally, so in a way you can have that big lift, and then you can have the lift again. But Hercules is in a great position. They've got beautiful geophysics, a very aggressive partner. They're in the United States, which, sometimes it's challenging to permit, but these guys got their permits to drill quite quickly. They've got a very big balance sheet, and they've got a very technically competent group. So, what more do you want? So it's like the bases are loaded. Yeah, someone's just got to light the spark, and away you go.
No, fantastic. We also have to talk about a negative example in the mining industry, which popped up the last couple of weeks here. That's red pine exploration.
Okay.
Because I want to showcase both the good and the bad a little bit, and maybe work out like why it's actually almost impossible to sometimes detect fraud in this space, and maybe run us through that example and what has happened.
Yeah, very simplistically, red pine. I don't know if anyone's followed the news of red pine, but they've been drilling away in northwest Ontario for a long time. They've got quite a few interesting gold drill results. And it just came out last week that it turns out that the assays that were coming back from the lab were fine, were kosher, but the assays were going to the CEO, only the CEO. And the CEO was accessing the database, and then some of the high numbers, he was making them higher by going like this. So he edited 0.5% of the assay database, but it was enough. It didn't double the resource, it just made it a little bit higher. It's kind of, in a way you could say it was quite smart what he did, as in he didn't make it too obvious. He didn't try and make a 1 million ounce, 20 million ounces, because he would have been found out years ago. So all this has just come out, and it's kind of shocking. Everybody's kind of shocked by it. Maybe we shouldn't even be talking about it, because it makes it sound like a industry of crooks. It's not. It's just this happens once every 10 years.
We're not invested, Neil.
No, and I've looked at red pine a few times on paper. Just always felt like it was going too slow. It's a bit like a lifestyle. It's what we call a lifestyle company. They raise a little bit of money, they drill some holes, they pay themselves nice salaries, go to conferences, never really push the project forward. So I always felt like a bit of a lifestyle company to me. So when the news came out, it's quite shocking, but it'll probably result in changes whereby now assays can never be edited in a database. Yeah, it's sort of it's probably a little bit of a wake-up call. And probably most juniors already have those processes in place. It's just an interesting example, this one, because they have in Canada you have something called a QP, a qualified person, and that person is responsible for signing off on all the technical disclosure. And in this instance, the QP was the CEO. The CEO was the only person with access to the assays before they got released to the public. So clearly there was a massive, corporate governance fail at that junior. And that individual may go to jail. There was an example of this 15 years ago in China. It was a Canadian company, but operating in China. Yeah, the guy got 6 years jail. He was editing the assays. So it doesn't happen very often, but yeah, it's kind of one of the worst extreme examples. Yeah.
No, absolutely. I wanted to highlight it because it showcases both sides of the spectrum as well. We have about 4 minutes left. So before I have a couple more questions for Neil, do we have any questions from the audience about discovery investing? Maybe what to pay attention to when you see a drill result or a press release with a nice headline? Well,
do you expect a big impact on discoveries by using AI?
that's a very good question. Let me just repeat that real quick for the audience virtually watching and streaming. Do you expect a big impact by AI on the exploration process?
I'm a bit cynical, yeah, by the word AI. I think people use the word AI for a lot of stuff which is just computing power. You know, even back in the Placid Home days, 1995, 96, we used something called weights of evidence. And would build our layers of data, geophysics, geochemistry, geology, and then would press the button and the computer would just sort of meld them all together and say, based on that, you got mineral prospectivity, here's an anomaly. And that was 30 years ago. To me, when I see people talking about AI today, it's the same as what we're doing. I don't see what the difference is. But another way to think about that is, if AI or geophysics or something gives you a red blob, you know, if you have a reason, I'm happy to give somebody money if they give me a good sales pitch, why they want to drill that hole. If they give a good sales pitch, I'm like, yeah, it's worth a go. It's gambling. It is kind of gambling in a way, but it's educated gambling. Now, that's not true discovery investing that Willem adheres to, or I used to, because it's pre-drilling. You know, it's before drilling. But every now and then I will take a punt on a early stage. Yeah, if the target looks compelling enough, the people are good, they've got enough money, and the valuation is stupid. You know, sometimes you see guys come to you like this, he's got a $3 million valuation. You know, he's desperate, he's doing the financing at the absolute bottom of the market. I've just invested in one 4 months ago in Peru. I think Willem put some money in too. And he's drilling holes now. But if he hits this $5 million junior, it might go to $100 million. You know, you kind of want those aggressive, huge upswings. So every now and then I will do one of them, but I don't do that very often. So to answer your question, maybe. I think AI is overused as a term. I think it's sort of trendy in the media. So, you know, guys are using it in their sales pitches, and all they're using is a computer and some geological brains.
One more, yeah.
What about mining on the ocean floors? You know, the manganite
Sure.
nuts and so on, because it's international waters. Everybody can go there.
Yeah.
Let me just repeat that again real quick for the audience at home. What about mining on the ocean floor, Neil, was the question.
Sure.
The international waters, rules don't really apply, apparently. What do you think?
Yeah, every cycle it comes back. You know, there are these little potato-sized nodules on the bottom of the Pacific. Covers a big area. There's a lot of tons there. But just there's been a lot of technology. In a way, it's good that they're looking at it, because it's developing marine engineering technology. It's like people go to space. You know, it's creating a load of great inventions that we use on Earth. I think from a pure economic point of view, it's never going to happen in my lifetime. They pull up these little nodules. You know, imagine you're sucking up the stuff off the bottom of the ocean that's 4,000 meters down. There's a lot of effort to get that stuff to the boat. Then you've got to have a specialized boat. You know, it's not a cruise ship like you've seen out the front here. It's a smaller boat. The tonnage you can get on that boat is only quite small. And then you've got to take that material. You're not going to process it on the boat. You've got to ship it to Japan or South Korea or somewhere. And then when you chop one of these nodules in half, it's so fine-grained. It's like 1 micron. So from a metallurgical point of view, they don't really work. And most of the value is manganese. South Africa has got fantastic manganese that will last us for 100 years. We don't need to mine manganese in a complicated micron-sized stuff. So I think economically it's not going to work. It's a bit of a gimmick. It's a bit of a sale. It comes around every cycle. I've seen it every cycle it fails.
Neil, allow me a last question. Where do you see the next discovery coming from?
Oof. You mean in the world?
Anywhere.
Oh, God.
Commodity agnostic.
Andes.
Andes?
Yeah. Just because it's an enormously long belt of very prospective rocks that provides already 50+% of the world's copper and a huge amount of gold. And so, yeah, as a shoot from the hip, Andes, yeah.
Fantastic. Neil, I promise not to ask you about the gold price and where it's
That's
going
good.
to go, so we're going to wrap it up here. Thank you so much. Thanks for your questions. Neil, thank you so much for joining us here. And thanks so much. Well done.
Take that. Leave that. Yeah, cheers.
Fantastic. Now,